Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. It was a mixed day on Wall Street. The S&P 500 and the NASDAQ propped up by an alphabet rally, but economy concerns seem to limit those gains. Meanwhile, will tariffs dampen holiday gift giving this season? We're talking to an expert on what to expect. And an important update on eBay e-commerce. We're speaking with the company's CEO on the company's performance and consumer landscape. Well, the holiday season is approaching quickly, and PwC says shoppers may be tightening their belts in 2025. A new report from the firm highlighting that consumer spending could be down by 5% compared to 2024, with Gen Z pulling back sharply, even as boomers step up their spending. Joining me now, we have one of the authors of that report. That would be Ali Furman, U.S. Consumer Markets Industry Leader at PwC, and Yahoo Finance Senior Reporter Brooke DePalma. Welcome to you both. Ali, I'll start with you. On that data point, Ali, which jumps out from your survey, so consumers expect their seasonal spending to decline on average by 5% from 2024. Why is that, Ali? What would be the reasons to explain that trend?
Yeah, well, it's a few things. Of course, the tariffs in the backdrop are deep in the consciousness of all consumers. They're very focused on are prices going to rise, and they're very budget oriented. So we're seeing the trend that we've seen for the last 12, 18 months continue right into the holiday season, and that's across every generation that we've surveyed. The 5% spend decrease is actually very much a story about Gen Z weighing down that average. To your point, 23% less spend year over year. And you see millennials and Gen X holding flat for the most part year over year, and baby boomers spending about 5% more. But
what's going on with Gen Z?
There's a lot to talk about with Gen Z, but if I had to make two main points, I would say it's a coming of age story. The average Gen Zer is now 22 years old. The oldest Gen Zer is 29. So they're having kids, they have mortgages, they have different expenses, and they're more focused on budget. But probably more interestingly, I think it's a validation that retailers are not yet meeting Gen Z's needs. They're a unique generation. They are the fastest to adopt trends and abandon trends. They're looking for incredibly fast, what I call social to shelf velocity. So they see trends on social media, they want it on the shelf right away. It often takes retailers months to get those trends on the shelves, and that trend may have passed by that point in time. They're looking for value, they're into treasure hunts, authenticity. I mean, there's so many things that are different about this generation than generations before that the vast majority of retailers have yet to capture their wallets.
And Brooke, to bring you here, does what Ali's saying here, does it generally kind of dovetail with what you hear from retail execs?
Yeah, well, right now what we're hearing is ultimately this newness, this innovation that consumers need in order to splurge on that purchasing power. We even heard it this morning. I was on a call with Tony Spring, Macy's CEO, and he said to me that they're going to denim, they're going to silhouettes, they're going to even others. And also he said that there's resiliency in the consumer right now, but they really don't know what the fall is going to bring, especially because of those headwinds that you brought up. They're still concerned about tariffs. There's still this uncertainty around what exactly their wallets will look like this holiday season.
Ali, do expectations always align with actual behavior? I mean, what consumers say they're going to do, does it always perfectly align with what they actually do at the mall?
They don't. And we know that there's this say versus do gap, particularly with some of the younger generations. For example, last year in our survey, Gen Z intended to spend 37% more than the prior year. They were kind of the stars of our holiday outlook. In actuality, they spent about 6 to 7% more year over year. So just as an example. And we also surveyed in June to early July. It was a slightly different environment at that point with economic uncertainty and tariffs than it even is now. So we have to just keep a close eye on what they're saying versus what they're actually doing, which we plan to do. We plan to track actuals all the way up till Black Friday because our survey says 80% of holiday shopping is meant to be completed by Cyber Monday.
That blows my mind. That's insane. A majority of holiday shopping is already done by Cyber Monday. I got to get on this.
Ali, when you ask people, to the extent that they are going to shop, how they're going to shop, what do they say? Is it mostly everybody's on their phone?
Oh, that's a great point. So our survey shows for the very first time, and we've asked this question for 11 years, we've done this annually for 11 years, parity between online shopping channel and in-store shopping channel for the very first time. So what that means is omni-channel is absolutely table stakes. It's a must-have, meaning, particularly for these younger generations, they want to, fill their basket online and show up in the store and have it there physically because they love experiences and they're going to the store to touch and feel and see and try on. Very few retailers have that back-end infrastructure to make that a seamless experience. Very few, but those that do are winning.
Ali, I feel like we can't do any segment without mentioning AI. Did you get any line of sight onto how that tech is influencing shopping behavior or could be?
Absolutely. We're very bullish on AI this holiday season for two main reasons. Number one, the budget-conscious consumer can use AI as their best friend. Put in, I have a $500 budget, I need to shop for 6 people, here's what they like. You can even show pictures of their style, and AI will make personalized recommendations and keep you on budget. But number two, AI can be used for gift discovery. And we think that this could be the tipping point for AI use in those kind of two ways. Then its traction has been somewhat modest with the older generations, but the younger generations are already using it. Over 16% told us in their survey they're already using it, millennials and Gen Z.
Brooke, when you're talking to retailers, what do they say about AI?
Yeah, well, what Ali said was interesting is that there's only a few retailers who could really capitalize on this, and that means that you need to have a solid e-commerce strategy and a solid store presence, and also the ability to invest in AI. And so from Walmart, for example, they're at the Goldman Sachs conference today, and the CEO did weigh in on this. He said that they have an opportunity to serve customers and members more effectively with artificial intelligence. He went on to say that we could see a future that is agentic, that's agentic AI, that's going to help lift some of the things that customers don't enjoy about shopping off their shoulders. So sometimes holiday shopping can be a bit cumbersome, but also everyday shopping, let's admit, can be a bit cumbersome when you forget the eggs or the ketchup or the mustard. That's what he used.
Yeah.
And so they're really leaning into AI to personalize discovery, personalize shopping. They have a new chatbot. It's called Sparky. This is something that Walmart they have the capital in order to invest in. In addition to that, they also said one big point here, that this AI bot can help manage returns. So I'll be interesting to see how that then comes to fruition, especially post-holiday. We know that because of Amazon, it feels like so many more shoppers are able, or so many more shoppers, consumers, are just choosing to return anyway, even if they somewhat like the gift.
Yep. Ali, final question. I'm curious, when you ask people, okay, you're going to go shopping, how do they say they were going to buy? How do they say they make purchases? Was it cash, credit cards? Was it buy now, pay later?
Yeah, we ask this question every year. So this year they said number one payment preference is credit card and debit card. Number two, cash. Number three, gift cards showed up in the top 3 for the very first time.
Did that break down differently depending on, generationally?
Slightly, although there was a lot of consistency in the cash preference, which is super interesting. Our view is cash is back for different reasons amongst different generations. Gen Z are using it as a budgeting tool. If you've seen that like envelope stuffing viral TikTok trend, they are using it. Cash is also a way to avoid tipping fatigue. You don't get prompted like you do with a digital payment to give a 25% tip. So you can kind of sidestep that. There's also small businesses that are incentivizing cash use so they don't have to pay the credit card fees.
Ali, great to have you here on set. Appreciate it.
Thank you.
And you too. Thank you, Brooke. Stick around. Much more Ask for a Trend still to come. The S&P 500 and the NASDAQ closing the trading day higher, getting a lift from Alphabet's rally. Yahoo Finance's Jared Blickley joins us now with the trading day takeaways. Jared.
Thank you, Josh. Last 2 weeks we were talking about rotation. That was the end of August, but now are we seeing more of it? Kind of reminded me of some of that. So let's go over what happened today in the markets. We had the Dow down, we had the NASDAQ up over 1%, S&P 500 kind of splitting the difference, and the small cap slightly in the red today. I want to go to the sector action. You mentioned Google, Alphabet, that was really driving communications higher. And so you can see that got 1.67% to the upside today. Also, there was spillover in Apple. Apple is in the tech sector. That saw some nice outperformance. Those were the only two outperformers. And then the only other sector in the green was consumer discretionary. So not surprisingly, and by the way, that's Amazon and Tesla. When we look at the NASDAQ 100, what really stands out is the outperformance in some of these stocks we were just talking about, but the Mag 7 overall. And it's kind of reminded me of a defensive trade. And we really see this when we take a look at the leaders here. This is a bunch of ETFs I've collected that kind of give me an idea of what's happening sentiment-wise in the market. Number one on that list is MAGS. That's the Mag 7 ETF. That's up 2.5%. Then you have New York FANG. A lot of crossover between those two, admittedly. Then you have the solar trade, which has kind of strangely erupted over the last month. And then you have the U.S. Internet, Korea. That's U.S. What is that? Korean market. And that's also a chip proxy. Then we have Bitcoin Bitcoin, biotech, and then we got the Qs, which is a NASDAQ 100. And so you see a little bit of red here, but my leaders are for the most part in the green. So this is a kind of a narrowing of the market. I'm not sure how to make it, but when we go to our next little bullet point here, things will become a little bit more clear.
So that's stocks.
Yes.
What about the bond market?
There we go. We got to take a look at rates rolling over, because I think this kind of completes the picture, and it's not just about rotation, because we did see that defensive trade into some of those larger names today, and yes, they can be a defensive trade. But what really strikes me is how rates across the entire yield curve are heading down. So this is a 13-week T-bill. Chart looks kind of funny because it doesn't move that much intraday. It was down 1 basis point. But when I put a year to date on, you can see how it was just going sideways and by the way, this tracks the short end of the curve, what the Federal Reserve is responsible for. And it was going sideways because no one was expecting the Fed to deviate from its plan that much. But then over the last few weeks, it really broke down. And so this is rate cuts getting priced in. And we saw the JOLTS number come in today a little bit weaker than was expected. Of course, that's ahead of this week's non-farm payrolls on Friday. That's a big jobs report. And rate cuts are great unless you really needed them yesterday. And if the market figures out that the Fed is behind the 8 ball, maybe it is. And if you listen to some of the, Waller and some of the other Fed people, maybe it's behind the 8 ball, then things can get a little bit dicey in terms of stocks and equities. So that was the short end of the curve. Let me show you what's happening on the long end of the curve. That's the full year. Let me just show you intraday. We got an 8 basis point move to the downside. We're down to 4.89%. Not only do we have the risk that the Fed is behind the 8 ball, but we've also seen long-term rates a little bit too high several times this year. And when it gets above 5, and particularly 5.1%, there's really not much stopping it to go much higher. And that's kind of when the bond vigilantes are in control. And that's when you also see equities roll over. So stocks are facing multiple risks right here. We're also entering the most dangerous time of year in terms of crashes. And we know that the VIX tends to head higher into the end of October. So you put it all together, we're facing a number of headwinds right now. Nevertheless, I just want to point out, I'm not sending red alarm bells because we are at or near record highs in most of the major indices. So you put it all together, there are some warning bells, but there are some risks that we got to pay attention to every day.
So stocks, we hit bonds. What about the metals?
Well, here's another one, gold smashing records. I've been looking at the gold market explode above 3,500, and let me just do it down here. I do have gold here, and there we go, 3620. Yesterday was 3,600. This is just over the last month. Check out the year to date. I'm going to do this again. I showed this pattern yesterday. Gold was going sideways for a number of months, and then it exploded to the upside just over the last few days. Well, given the length of that base, it can go much higher in space. So the rhyme goes. And why would gold be kind of unhinged right now? Well, that gets to the fact that the federal fiscal position has caused the long end of the curve to kind of become unhinged. And meanwhile, you have the Fed lowering rates and kind of giving away free money or approaching that zone where they're giving away money. So you put it all together, commodities like gold and the precious metals should outperform in that scenario.
All right. Thank you, Jared.
You bet.
Appreciate it. Stick around. Much more Ask for a Trend still to come. The end of the de minimis exemption has put pressure on a number of names in the e-commerce space. Yahoo Finance senior reporter Alec Canal sat down with the eBay CEO to talk about the impact on the company.
You did say that caused some disruption when it comes to China. That exemption in Beijing was in May. Now that we've seen that expand, how are you handling the changes to your business?
Yeah, I like to say at eBay, we're not immune to it, but we're more resilient. And that's because of the breadth of sellers and buyers that we have on the platform. We've been dealing with cross-border trade and helping them for 30 years now on eBay. So when you look at China, our sellers were actually very nimble. And as de minimis was introduced a couple of months ago, they actually started to open up new corridors, like shipping into UK and Germany overall. And buyers have a lot of choice on eBay. So if they want to buy from other countries, they want to buy domestic products, it's one of the great things. We have 2.4 billion listings on the platform. Even the most recent news was contemplated in the guidance that we put forward.
And do you think the de minimis ending that exemption, does that make U.S. sellers more competitive, or is the added cost not at a level yet where consumers are choosing those U.S.-based products versus maybe some of those cheaper alternatives overseas?
Yeah, what's great is consumers can choose from 190 different markets from around the world. And when consumer dollars are stretched, they actually turn to eBay because of value. 40% of what we sell on the platform is used or refurbished. And so that's a real advantage for us to have. Small businesses on eBay, they sell throughout the world, and we make that really easy with different shipping solutions that we provide. We provide SpeedPack. We have a program called eBay International Shipping. So as a platform, it's really about how do we make it as easy as possible for sellers to deal with cross-border trade.
And outside of de minimis, there's also the tariff landscape, which continuously keeps changing, a lot of confusion for both businesses and consumers. How have you been leading the company through this uncertain time?
Yeah, the biggest thing we've been doing is making sure that we've enabled the platform to be seamless. So, for example, for our business out of China, 3/4 of that is forward deployed to the US. Our sellers are already putting it close. And for the other half of direct ship business, we build solutions like SpeedPack. So for buyers, there's complete transparency. It's very clear what to see. We've also been building solutions so that consumers here in the States can ship to 190 different countries with ease. So essentially, if we were here in New York City and we wanted to ship to Poland, all the seller has to do is ship it to Chicago, and eBay takes care of the rest, the duties, the taxes, the returns, really simplifying life for our sellers.
And what's your read on the U.S. consumer right now, how they're interacting with your platform? We've been talking a lot about the higher income versus lower income consumer and this bifurcation. What have you gleaned from some of the behaviors and spending habits from your customers?
Yeah, in the U.S., our consumers are actually hanging in there. We talked about in Q2 that our U.S. business grew 7%. In our focus categories, the ones where we're really leaning in, we grew 10% in the quarter. And so we're really seeing strength in the business. And that's across motors, parts, and accessories, luxury items like handbags and jewelry, to sporting equipment, to back-to-school uniforms. I would say there's been a bifurcation between the U.S. and international, much more challenging environment in UK and Germany right now than what we're seeing in the U.S.
And why is that, Jamie?
I think what we originally thought at the beginning of the quarter was maybe this was pull forward demand from consumers. But what we talked about is that lasted all throughout Q2 and into the start of Q3. I think the other thing that's unique to eBay that we see is that consumers often do trade down to a used, to a refurbished item on the marketplace. Or when their dollars are stretched, they start to sell things. And that actually helps grow the overall flywheel of the business that we see on eBay. And so it's been encouraging to kind of see those results.
Yeah, that flywheel equation is interesting for your business in particular. And in terms of the categories, it sounds like you're seeing still resilience among a variety of different products. Are there any categories that maybe are a bit more sensitive in this time where consumers are a bit more stretched?
Yeah, we're really seeing strength across the board, across the business. Our motors, parts, and accessories business is doing well. We have 5 categories that are over $10 billion. And part of it is we're actually taking share at eBay. So when you look at our focus categories over the past few years, we've taken market share. And that's really because we're doing new things like, we're authenticating products now. We authenticate watches and handbags and jewelry and trading cards. In fact, we've now authenticated our 15 millionth item on the platform. So that trust is giving people comfort in buying on the platform. eBay is also a reflection of what's happening in pop culture. People are shopping for K-pop Demon Hunter things. They're shopping for Taylor Swift's engagement dress. Pokemon is really exciting right now. So we're seeing enthusiasts really lean in because eBay is a destination for enthusiasts.
And Labubus, right, Jamie? I think there was the most expensive Labubu in the world just sold on eBay. What have you seen there in that market?
Yeah, it's exciting to watch. We introduced this new thing called eBay Live, where sellers are doing these live sales of selling their items. And so, Labubus are going for a lot. We just sold a Patek Philippe watch for $75,000. The Backstreet Boys were on last week kind of doing an eBay Live. So it's bringing this whole new community to life. And what's fun to see is the intersection. You really see pop culture come to life on eBay.
That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.